Hello everyone, I'm Nikhil Khaneja, a chartered accountant by profession with over 12 years of experience in accounting and finance. For the past 10 years, I've been working as a corporate trainer delivering specialized training across various domains of finance. I've also worked as a consultant with leading firms such as EY and PwC. My training portfolio covers a wide range of topics, including investment banking, financial modeling, valuation, and several other finance related disciplines.
So guys, today we are at a platform from Eddie Globe. Yeah guys, so today we are at a platform given by Eddie Globe and I am CA Nikhil Khaneja, your mentor for today's session. So guys, today we are here to discuss the role of AI in finance and some other associate topics. And we might be having different people from different states having different education, different profession. But we can say in today's context, when it comes to AI, artificial intelligence, as well as the finance, is beyond away from the smallest or narrow parameters of someone's educations or someone's professional qualification. Like someone could be chartered accountant or company secretary or doctors or MBAs or engineers or from any other profession. Hardly matters. In today's environment, in today's dynamic environment, AI is something, artificial intelligence is something, it is of use to anybody. Finance is something, it is of use to anybody. Doesn't matter आप किस profession में हैं, doesn't matter आपकी क्या education है, doesn't matter आप अपनी life की किस stage पे हैं. Are you a student, are you a professional or someone else? Or you might be a self-employed person. So these are the very hot topic today, which are useful for any person. So just here for today's webinar, we have 5 topics. One is AI and finance. The second one is behavioral finance in the post-pandemic world, FinTech evolution, sustainable finance in ESG investing, environmental social governance investing, and the personal finance, which is the most prominent part of anybody's life. Guys, we have 1.5 hour today and we will like to make productive use of this 1.5 hour. Otherwise, I should have given an opportunity to all of you to give me your brief introduction. But because of less time, we need to skip that part and we will directly come on to our discussion. Guys, just to start with our topics, the first topic is AI and finance. Let us one by one understand these terms. From the last few years, we have been hearing about AI, artificial intelligence के बारे में हम काफी ज़्यादा सुन रहे हैं. AI. उससे पहले क्या ये term exist करती थी या नहीं करती थी? That could be a question. But yes, for the last 4-5 years से हम इस term को काफी सुन रहे हैं. इसका काफी craze है. People are using more and more AI. And when it comes to this finance, this has been the topic of uses for years and years, decades and decades. This is nothing new to our life. Guys, when we say AI and finance, we need to understand few things here. आज के सिनेरियो में when we think of this term AI, artificial intelligence, तो मैं आप लोगों में से कुछ को एक अपॉर्चुनिटी दूंगा so that you can tell me and other people कि AI का आपके कॉन्टेक्स्ट में, आपकी सेंस में क्या मीनिंग है. We have Anshuman. Anshuman, could you please tell me what do you understand by AI? We have been hearing this term for the last few years. What do you understand by AI? Artificial intelligence होता क्या है? Anshuman, could you please unmute yourself? Amresh, or anybody can initiate.
Yes, sir. It is computer brain.
Amresh, yeah.
Sir, it is computer brain.
Computer brain. Okay.
Yes, sir.
Anybody else?
It is any type of computer software that can learn and improve itself over time. As we continue inputting more and more data, it like learns from the data input that we give. And over time, when it gathers information from many people and many type of data sets, then it becomes like it gains the ability to make decisions without complete human involvement.
Without complete human involvement.
Development of computer system.
Development of
Computer system that can perform tasks that typically require human intelligence.
Okay, okay. Anybody else? Anyone who wants to say anything?
They are using AI nowadays because to reduce the human work.
Human?
Human work.
Okay.
Reduce human power.
Okay, okay, okay. So guys, you shared few of your opinion and understanding with respect to AI, artificial intelligence. And when we talk about finance, so finance is nothing but we can say in a simple word, understanding of money. जब हम फाइनेंस की बात करते हैं तो इसमें we understand the nature of money, how does money work, we talk about resources, financial resources, we talk about investments, we talk about capital. Overall, when we talk about finance, it is completely associated with the term money. It is completely associated with money. पैसे की जब बात होती है, then we use the term finance, which is a fancy or we can say more sophisticated name that we can use for money. We use finance or finances. Guys, here our topic is AI and finance. तो जब हम AI and finance की बात कर रहे हैं, तो definitely here we want to create a connection between AI and finance. इन आज के सिनेरियो में, आज के संदर्भ में, आप किसी भी रोल में अपनी लाइफ में हैं, आप किसी भी फंक्शन को परफॉर्म कर रहे हैं, तो कोई भी फंक्शन ऐसा नहीं है, कोई भी ऐसा कोई टास्क नहीं है, वेदर इट इज योर डेली रूटीन लाइफ, वेदर वो आपकी ऑफिस लाइफ हो गई या आप किसी कॉलेज में हैं, आप कोई प्रोफेशनल कोर्स परस्यू कर रहे हैं, आपके हर एक टास्क में आज की डेट में आर्टिफिशियल इंटेलिजेंस या वी कैन से, अगर मैं बहुत ज्यादा सिंप्लीफाइड वर्ड में बोलूं तो टेक्नोलॉजी का इन्वॉल्वमेंट है. आपके हर एक टास्क में टेक्नोलॉजी का इन्वॉल्वमेंट है. एंड ग्रेजुअली day by day, year on year basis, it is having rapid increase, rapid impact on your daily life. अगर मैं आप लोगों से पूछूं कि ये जो एक टर्म है AI, आर्टिफिशियल इंटेलिजेंस, आप लोग इस टर्म के बारे में कब से सुन रहे हैं? अगर मैं आप लोगों से एक सिंपल क्वेश्चन पूछूं, AI, आर्टिफिशियल इंटेलिजेंस, तो कब से आप लोग इस टर्म के बारे में सुन रहे हैं? कब से आपको लगा कि इसके बारे में ज्यादा डिस्कशन हो रहा है? या आप में से कोई मुझे बता सके कि AI का बर्थ कब हुआ, जन्म कब हुआ? एनीवन? Guys, please participate.
Sir, the first time that I have heard about AI was in, I guess, 2022 or 2021,
Okay.
when ChatGPT raised a huge amount of funding. So that
Okay.
is when it came to the news and I got informed about it.
Okay. Okay. Anyone else? Anyone? एक सिंपल क्वेश्चन आप लोगों से मैंने पूछा कि आप when for the first time you heard about AI, या आपको ऐसा फील हुआ कि AI जैसा कुछ मार्केट में आ चुका है? Anyone, please? So as someone said that he heard for the first time about AI in 2021 and 2022. Guys, अगर मैं आपसे पूछूं क्या, और उन्होंने रेफरेंस भी दिया कि 2022 में चैट जीपीटी आया था, ओपन एआई, उसके बाद से वी ऑल स्टार्टेड डिस्कसिंग अबाउट एआई. हमें एक काफी अच्छी टेक्नोलॉजी मिली, काफी अच्छा सॉफ्टवेयर मिला, ओपन एआई ने इसको इंट्रोड्यूस किया. एलॉन मस्क इज वन ऑफ द फाउंडर ऑफ चैट जीपीटी एंड इन्होंने 2022 में इसको इंट्रोड्यूस किया एंड ईयर ऑन ईयर बेसिस में इसमें और इंप्रूवमेंट्स आ रही हैं एंड इट इज बिकमिंग वेरी यूजफुल टूल फॉर मैनी ऑफ अस. क्या उससे पहले भी, अगर हम 2022 से पहले चले जाएं, क्या उससे पहले भी एआई एग्जिस्ट करता था? यस और नो गाइस?
I think yes, sir.
अच्छा गाइस, प्लीज ऑल अदर.
Yes,
क्या
sir.
उससे पहले एआई एग्जिस्ट करता था?
Yes,
यस सर.
sir.
Yes,
यस.
sir.
ओके ओके. तो कोई मुझे बता सकता है कि कब से एग्जिस्ट करता था, कब एआई का बर्थ हुआ?
I think
I think
1960 or 70, 1960 or 70.
ओके ओके ओके
I think so 1956.
ओके. So guys, if you will read the history, you will know that for the first time when we heard about artificial intelligence, it was year 1950, 1950. In 1950, one of the foreigner, there was a conference basically, and one of the foreigner first used this term AI, and their question was, can machines think? In 1950, basically there was a conference held by few of the technology people, and one of the foreigner used this term AI for the first time and asked the question, can machines think? This was the first discussion on AI. Can we create such kind of machines which can think, which can just think like as we are human, we think? Can they think? So this was the one of the biggest question that people discussed about in that era. And then year on year basis, there were lots of development, lots of discussion, lots of new invention, lots of new creation. And then year on year basis, we have reached to today's environment that we can say that artificial intelligence has become one of the most important tool of our daily routine life. So guys, when we say AI and finance, आज की date में, when we are using the term AI, when in 2022 this AI came, ChatGPT came, many people started discussing about employment. Will people lose their jobs? One of the biggest question that was into the people's mind, because it is a new technology that has been rapidly increasing in our daily life. People are moving more towards AI, more towards artificial intelligence. All the things are getting automative in the industry. So people started having this fear in their mind that will we lose our job? Will it impact the employment opportunities in the market? Guys, if I ask you, what is your take on that? Does AI affect the employment opportunities available in the market? Guys, please participate.
AI obviously will reduce some jobs,
Mhm.
but at the same time, it will also create new ones.
Yeah,
Like it will transform existing roles and reshape the entire job market.
definitely.
Like just before like we got hands before the just before the internet, or like before we got access to the internet, there was a whole lot of discussions that internet, because of internet people might be losing jobs. But what happened is exactly the opposite. Instead, the number of jobs increased. Yeah, the traditional jobs were lost in the process, but yeah, new jobs also got created in the process.
Definitely, definitely. Both the guys rightly said. Guys, just think about MS Excel. When we did not have MS Excel, there might be some ways to perform calculation. We might be using manual calculators. We might be using some other ways, notepads and all, like paper pen, to perform the calculations. And when this MS Excel, or what we can say other spreadsheets, got introduced into the market, people might have a same fear that will we lose our jobs? Will it affect the employment opportunities for people who are performing the same kind of calculations? Because now MS Excel or other spreadsheet software was there in the market. So did they affect the employments? Definitely it affected the employment opportunities for some time. But then the scenario totally got changed. Other jobs came into the market. How to use the MS Excel more effectively? How to use the MS Excel for your working to make your working more easier and to complete the task in a less time. On the same line, when we talk about this artificial intelligence and other associated things, like most importantly chat GPT, so now definitely when things are getting more automative, it will affect the employment opportunities. People who are engaged in manual workings, people who are doing the task manually or in some other ways, definitely they will be, the things are becoming automative. So the focus of the industry, the focus of the management, and focus of the people who are owning capital will be on automating the things so that they can complete the task in less time, so that they can do the task in a more effective way, so that there should be complete accuracy. There should not be any ground for erroneous things. But at the same time, the fear that we may lose our jobs, that gets shifted to another opening, which is how to use the artificial intelligence to make your job easier. And also, there are many grounds available, many areas available where AI has not still reached. Now your job to find the ways how you can use the artificial intelligence and other artificial software available in the market to make the work easier. Still, there are many jobs which are still done manually or by some other ways. So your job to find out the ways how you can involve artificial intelligence to make such job easier, how you can make such jobs automative, so that there should be less people involved. So what we can say, when new technologies come into the market, focus gets shifted and the role of the people get changed. Now your job is to use that technology effectively. Now your job is to find out the ways how you can use those technologies in other area where it has not reached. So one big statement we can always give: new technology, new development just change the way of doing the work, but they can affect the job market for some time. But after some time, it will naturally correct and new jobs will come, because new perceptions will come, new ways to do a particular job will come. One job can be done in by many ways. We have multiple ways to perform one particular task. But when we bring that technology on our table, so our focus is how to use that technology to complete our task. So never fear of any technology. We all can give this responsible statement. Never fear of any technology which is coming into the market. It will never take your job away. It is just that it is your responsibility to keep yourself upgraded, to learn that technology, to upgrade your skills so that you can use that technology. Definitely there was a time when there was no car. Definitely there was a time when we did not have laptops or computers. But when these technology came into the market, we learned that, and now we all are using such technologies and we are very comfortable on that. So if someone says that it can take your job away, no, it can affect you for some time, but naturally in some time it will, the environment will get corrected, people will know the new technology, and definitely new jobs will come, and it will hardly affect your job opportunities in longer run. So guys, artificial intelligence in finance. What we understand by introduction of AI in finance: artificial intelligence technology allows computer and machines to simulate human intelligence and problem-solving tasks. The ideal characteristics of artificial intelligence is its ability to rationalize and take action to achieve a specific goal. Guys, when we think about artificial intelligence, do you know what is the main focus when we people think about AI? We need to create such softwares, we need to create such automative machines which can actually resemble how human thinks, how human work. The main agenda, the main goal of AI is to replace the human in particular task. Like, or what we can say, to just completely simulate the human working. Definitely there might be some tasks which humans are doing. So when someone is bringing this technology on the table, that now we will be performing the same task with the help of technology, with the help of any artificial intelligence, or we call it software. What is our purpose? Our purpose is to create such technology which will completely resemble how humans are doing the same task. Only then we can say this technology will be successful. Otherwise, there will be failure. In case this technology get failed to just imitate the human working, this technology will no longer survive. Because human will adopt the technology only in that case when they are very much confident that it will actually imitate the human working with no errors. Because when we are depending on technology, though definitely we want to remove the scope of errors. Guys, what is AI and how it's transforming finance? They say artificial intelligence, simulation of human intelligence by machines. Finance is rapidly integrating AI for automation, analysis and predictions, applications, fraud detections, algorithm, trading, credit scoring. Guys, in today's environment, when we talk about finance, so we say it is about understanding the nature of money. How does money work? How we arrange different finances, because for example, when we talk about finance, so there is no business which can work without finance. For example, there are some people, some set of people who want to do any business. So they first come out with the idea that they want to do this kind of startup, they want to invest in boutique industry, or they want to invest in automobile industry, or they want to come up with any product. The second question would be, how much funding is required for that business? The second question is, how much funding is required? So, for example, some people come out with the idea that they want to go with this product, and for that product, they need 10 crores of investment. They need 10 crores of investment. Now, they have to arrange 10 crore rupees. And then there is investing decision and financing decision. Investing decision, where to invest. Financing decision is from where to arrange that money. From where to arrange that money. For example, some people, those guys says that we have 3 crores from on funds. We are introducing 3 crores from our on funds. Now rest of the 7 crores would be raised from debt, or we will be taking borrowings from any bank or financial institutions. So what we are doing basically a financing. We are depending on some financing arrangement. It could be equity, it could be debt, or it could be any other source of finance. But guys, here there is an element of artificial intelligence, that how we can take the financing decision too with the help of artificial intelligence. How we can do it in any organization. When we take these financing decisions, where to invest, how to invest, or even from where to arrange the money, and also when you complete your financial year, so you get some profit. The third decision come, that what to do with that profit, how much to distribute as dividend to the shareholder, and how much to be retained in the business. In generally, in the context of finance, we always talk about 3 financing decisions. Where to invest, then from where to arrange the finances, and third one, after completion of financial year, in case you have some profit, what to do with that profit, how much to be distributed as dividend to the shareholder who have invested money, and how much to be retained in the business for your future business expenditure. Okay, so guys, this is all about finance. But now here we are discussing how we can use artificial intelligence in our financing decision. For example, first question is, where to invest? There might be multiple ideas which can come into your mind. Like there is a team of investors who want to invest money. All are very well qualified, and they are thinking to start any good business startup which can prosper in the future. Then first question come, where to invest? What are the most profitable venues available? Some people might be interested in automobile industry. Some people might be interested in FinTech. Some people might be interested in FMCG. There might be different ideas. The question is, with the amount of capital that you are planning to invest, what could be the most possible or feasible ideas available to you? Can AI help you in that? Definitely AI can help you in that. It will ask you a few questions, because artificial intelligence has been created in such a way that you will be asking question and it will be giving you answer. You will be asking question and it will be giving you answer. How such kind of artificial intelligence is creating? Like few years back, we used to talk about expert system. Few years back, in the context of IT industry, we used to talk about expert system. Expert system, guys, is nothing but artificial intelligence. For example, if I have to start a business, I have to start a startup. Okay, and I am thinking to invest my money in boutique industry. And I have some sort of money in my mind that I'll be investing this amount of money in my business. For example, I have a number that I am going to invest 10 crore rupees. Now, I'll be looking for a consultant who can actually guide me for a boutique industry. Whether with the funds of rupees 10 crore, I can do a business of boutique. Will it be prospering with this amount of capital? Will I be facing some other difficulties? Will I be short of money? I have plenty of questions in my mind, and I need a consultant who can actually help me whether to start this business or even not. So I'll be looking for a consultant. I'll be exploring internet. Is there any person related to boutique industry who have good expertise in this industry, so that I can just book an appointment and I'll go and meet that person, so that he can answer all the question which I have in my mind, and I'll be paying some consultation fees to them. That's it. But in the context of artificial intelligence, scenarios get changed. So now, for example, now people are thinking of a technology, people are thinking of creating a system which can actually answer my question. There should not be any human involved. For example, there could be any application, there could be any website which I will log in and I will just ask my question, and there would be some technology. There can be any bot, there can be any artificial setup created which will be answering my question. I'll be putting up my question and they will be answering each and every question in detail, precisely. Definitely they can charge money for that or even not, but charging money is not a question. My concern is, will it be able to help me? Definitely it will be able to help me if that system has been created beautifully. Beautifully means in such a way that it can actually imitate the human working. For example, alternatively, I was just considering a consultant, that I'll be going to consultant and he will be answering my question. In the same way, now I'm considering a website. I'll be asking my question and the setup there will be answering my question, giving me all detail which I needed. So what is the difference? Now there is a machine, now there is a software, now there is some working behind that software, which is basically designed in such a way that it will, in order to answer my question, it will think in same way, the way human think, the way any consultant which has good experience in the field of boutique will answer. So they are just trying to imitate how human work. So this is the change. So will we say that all those consultants who have good experience in the field of boutique have lost their job? No. But we can say they are actually the person who are creating this technology. Now they have become creator. Now they have become creator. Like we say, you have two options in your life. One to do a job, other is to provide a job. In the same way, we can say earlier those guys were actually providing the services by themselves. But now they're actually creating platforms or setup to provide those services. Now they are not actively engaged in providing those services, but they have created such automated setup which is working even when they are sleeping. And that is the main advantage of technology, that you do not need to actively involve all the time. Many of you guys like must be having some career. Some of you might be from accounting background, finance background, or from software field. You also be thinking such kind of idea in your mind that after some time or even in present environment that you want to create any setup so that you do not need to actively involve all the time. You are earning even when you're sleeping. Like many people say in the investment context, do such investment, you are earning even when you're sleeping. In same way, you should earn from your business, you should earn from your education, you should earn from your professional education or the certifications that you have got in your life, even when you are not actively involved. It is the main, what we can say, the purpose of bringing technology into the market. Guys, there are few instances like robo-advisors, as I talk, automated platforms for investment guidance like Zerodha, Coin, Upstocks. These are basically like when you want to invest in stock market. So these kind of applications and websites really help you for that. There are very good automated systems. Customer support. Many a times nowadays you will find this features a lot. Like whenever you are visiting any website, rather than any manual chat box that there is a people who is answering your questions, there is a chat box, there is a robot which is answering your question. It will be asking question, you will be answering. First of all, it will say, how may I help you? Then you will be choosing your question from some of the options given by the website or that chat box. Then it will be accordingly managing your questions or providing you resolution for your problem. Then fraud detection. AI tracks unusual transaction in real time to prevent cybercrime. Like banks are generally concerned about these features, these things. Nowadays, cyber crimes are on the peak. Lots of people are engaged in fraudulent activity. They want to steal your money by engaging you some in malpractices. So even many financial institutions and banks are involved in such features that they are using AI to prevent those circumstances or those things to happen. So how AI can help? Obviously, it is not easy for any human to trace or track each and every transaction which is occurring on real-time basis. In a banking system, thousands and even lakhs of transactions are taking place even in an hour. And it is not always possible for human to keep their eye on each and every transaction. In such circumstances, it is very probable that some mishap can happen and people may lose their money. So in order to prevent some situations to come, banks and other financial institutions are really depending on such technology which can actually have their eye on such transactions, and they can read the pattern, and they have also some background working from which country that transaction is taking place, what is the KYC of that person, and accordingly they take action in case they find a particular trend, and they at that system feel, as a human feel, that system also feel there could be something wrong, there could be something fraudulent, then it will take the preventive action or the detective action as the case may be necessary to at least stop the loss which can occur. Algorithm trading, high frequency trading using AI to analyze real-time market data. It is again the feature related to stock market. Benefits and challenges of AI in financial services. Benefits: speed up data analysis. Again, in data analytics, AI is, I can say, a big milestone, because the amount of data which AI can analyze, it is really difficult for human. Nowadays, like earlier, for data mining techniques, different ways were available to understand your consumers, to understand how they think. But now, each and every action that you perform on internet, it is getting observed. Many a times you must have felt that, for example, you are searching any clothes or you are searching any shoes on the on your smartphone or your laptop, and after that you start observing advertisement related to same product. What is that? Definitely there are some data mining techniques working behind your system you are not aware of, but people are observing you, or technologies are observing you, and accordingly they are providing you some options. They are actually are able to understand your taste. How do you feel? What do you feel? At what point of time? What do you think? Resource operational cost, reduces operational cost. Definitely when technology is coming into the market, so one of the purpose which get fulfilled is to reduce the cost, cut off the cost, deliver personalized services. Now we are, for many personalized services, we are depending on technology. It could be some beauty related apps, it could be some other health related apps. So they are also providing health related services nowadays. There are many bots which are answering your question. If you will visit the web, you will find many websites and applications which are providing you resolution for your health concerns, and they are not human, they are basically bots. Challenges: potential bias in algorithm. Yes, there could be some potential bias. Those biases might be created by people, or we can say incorporated by people who created the technology you are not aware of. Can technology be biased? Definitely technology be biased, because after all, there are humans who created such technology. And can there could be some manipulation with the technology? Definitely, because it is all about the programming and coding. So the person who has created those apps, the person who has created those artificial intelligence software, they can do programming or coding in such a way that it can actually not be justifiable with everyone. There could be some potential bias. It will be serving to you in such a way that you will be bound to provide some financial benefit to other person who is working behind the technology. They are providing you options, and they are making you bound to buy some product which might not be of your benefit. Data privacy concern, definitely. Nowadays, on every application, on every technology, every website which you are accessing, first of all, you need to provide your private details. Or even when you are visiting any health related websites, you are sharing lots of private details. You are uploading your health reports. On any educational websites, you are uploading your educational documents. And at the same time, many a times you are sharing private information, health related information with the artificial intelligence doctors, which are available on the website. So definitely there are data privacy concerns. High initial investment and regulation gaps. Is that easy to create a technology? It is that easy to create artificial intelligence software? No, it requires huge amount of investment, big investment required. Many a times you can think that I'll be creating a website, I'll be creating an application to just to ease, so that it can ease my work, or I'll be creating an e-commerce website so that where I can sell my services, or as the case may be product. But it is that easy? When you start creating a website or when you start creating a application, it could involve big amount of investment. Many a times it takes a lot of time. People who are in the software industry, they know very well. It is sometimes it become, even for the software developer, it become very difficult for them to provide the deliverables on time. Multiple glitches are involved, multiple problems are involved. Capital investment is always a big concern. And regulation gaps. Are there good amount of regularities available in the market to have their eye on the people who are creating technologies or using artificial intelligence? No. Deep fake is the biggest example, that people are using technology for wrong reasons, and there are no regulators available as of now. What we can say, stringent regulations applicable on them to take action against them. Again, जो आपके normal laws हैं, but we can say Indian Penal Code or other available laws in the market, they are just controlling these things. But there should be particular authority, or we can say separate laws for these, so that it can have their eye on these things, and accordingly action can be taken, punitive action can be taken against those people who are using technology for wrong reason, for wrong intentions. Future trends and role of AI in finance. AI will enable ultra personalized financial products. Definitely. People are creating such financial applications which will provide you personalized services, like how to do investment into stock market, how to invest. Like in the financial sector, we always hear one thing, always diversify. So diversification means always invest your money in different sources of investment available to you. So there might be some application available in the market which will guide you where to invest your money. For example, which stock to pick up. There might be multiple stock running into your mind, so you might be interested in asking a question where to invest. Then those apps can help you. AI plus big data will transform risk assessment and lending. Nowadays, any bank or financial institution, when they are thinking of providing loan or thinking of lending to any company, any individual, so they need to perform risk assessment. Generally, risk assessment is carried out by some humans also. They read your financials. They analyze your financial statement. They ask for your earning documents. They might be asking for your ITR's income tax return. Accordingly, they check your credit worthiness. And accordingly, they take decision whether to give a loan to you or not. But nowadays, applications are also playing the same role. You will be uploading your documents on a website, or as the case may be on application. Then that application itself will analyze the documents, will check the credit worthiness of the loan applicant, and accordingly take the decision whether to give the loan or not. Integration with ESG, environmental social governance data for ethical investing. Nowadays, as you must have heard about CSR, corporate governance practices, that every company has to invest some percentage of the turnover on corporate governance practices. So AI can also play that role. All the areas where ethical investments needs to be done, AI will be helping you. Like these are the options available where you can perform your CSR responsibility. This is your turnover and this is the percentage that you need to invest in CSR. Risk of explainable and regulated AI for transparency. Guys, understand this statement. Risk of explainable and regulated AI for transparency. Guys, when we people are depending on AI, so definitely this AI needs to be regulated. Regulated means we need to create such an ecosystem where AI can only be used for good reasons, for good purposes, not for the bad reasons. And also the transparency needs to be there. For example, if you are providing your information to any website, on any application, they should give you the disclosure, like from where this information can be shared. who has access to this information, and also the accountability document should be there, accountability agreement should be there, that in case your information is misused, then that application, the owner of that application, or as the case may be website, will be accountable for such losses which you can occur. So definitely there should be some regulation over this technology so that it can be ensured that in this environment, technology will be used only for good reasons, not for the harmful of any person. Behavioral finance in the post-pandemic world. Guys, in 2020, almost COVID hit the market. And after COVID, definitely the way we people think now, it has got changed. It has drastic impact on our thinking. How do we people think now? There is a big change. We all guys witnessed that pandemic, that how it has impacted the people lives, people health, also the people employments, their jobs, and also the future business scenario. It has a complete, what we can say, far reaching impact on the environment. I don't think any of the thing which could be what we can say kept away from that effect. So now behavioral finance studies how emotions and psychology influence financial decision. Guys, like generally we see or we say that we make a plan about coming 5 years, we make plan about coming 10 years, and it is always good to have plan. No one can criticize that thinking. It is always good to have plan. We need to plan for coming 10 years, 15 years, 20 years. Parents plan about their kids' education. Kids plan about their further higher studies, that we are going to do that, we are going to do that. So everyone has some plan on their table. Even it is individual or any institution or a big corporate or even a government, everyone has their plan on the table. But after COVID, definitely it has affected us psychologically. It has changed the way people have started thinking. Like people have that kind of tendency generally that we need to make long-term plans. But now people have become so much of pessimistic. They fear of taking long-term decision. First of all, they want to ensure about their short-term goals. Like in case we are happy today, please listen carefully. People are thinking in case we are happy today, if we have a happy present, definitely then we will afterwards we will think about the happy future. But in case we are not completely confirmed about the happy present, why to think about the happy future? So people are now focusing on more on the short-term goals. First of all, they want to ensure themselves about their short-term accomplishment. And accordingly, they are now taking their financial decision. Post-COVID fear, uncertainty, and herd behavior impacted market movements. Because when you see life is very uncertain, after COVID, people realize that life is very uncertain. There is no that much of guarantees about future. So accordingly, they take their financing decision, and accordingly they invest their money into the market. They might be thinking of investing their money for short term, not for long term, because they don't want to depend more on the long term growth. They might have a perception that we want to enjoy our short term wealth. Retail investors surge due to online access, social media influence, and FOMO. Nowadays, retail investors are coming into the market. And why such? Because of social media influence and FOMO. FOMO means fear of missing out. Nowadays, we guys have a tendency, we also want to do what others are doing. So we have a FOMO. This is FOMO. We also want to do what others are doing. We hardly feel that what we actually think about that particular thing. Many a times we are just in a rat race, that because some other guys are doing the same stuff we also want to do. It hardly affects whether that particular thing is actually beneficial to us or not, whether it is of any use to us or not. Key biases and investor behavior post-COVID. Guys, it is saying risk aversion. Now people are hedging against big risks. So they want to take such decisions which keep them away from risk. Risk aversion means getting avoid the risk. People became cautious and avoiding risky investments. Overreaction, sudden market dips led to panic selling. Whenever they observe any sudden market dip, so they start selling their stock. Short-term focus, increased interest in quick gains, crypto trading apps, DIY investing, do it by yourself. Rise in self-directed trading via platform like Zerodha and Updocs. So people are now focusing on such applications and software which provide personalized services. Rather than depending on other people, people want to take decision by their own with the help of some utility tool. Challenges in investment patterns, post-pandemic shifts in behavior, increased retail participation, more first-time investors joined via app like Zerodha, Upstock, high risk appetite, sudden interest in crypto, meme stock and trading, DIY investing, fewer people relied on advisors and started managing money based on YouTube, Telegram groups. You must have observed many people are now available in the YouTube who are providing you financial advices, who are giving you advices how to invest in the stock market, which stock will do best, which where to invest, where not to invest. So on YouTube nowadays, advices are available almost for everything. Not only finance related, not only health related. You just type on the Google, you just type on the YouTube, you will get the advisor for each and everything. I am not going into that whether it is good to take such advices or not. I am not talking about. I am just saying that yes, advices are available for almost everything. So now people want to do the things by yourself. It is a change in the mindset. They don't want to depend on other people. Mental health link, financial anxiety became more common due to job losses and unstable income. Post-COVID, people lost their job. Many people lost their businesses. And it also changed the way now we need to do our businesses, because people became more inclined toward the online portals. And also the people were more inclined toward such businesses which can be done via online mode. Accordingly, financial anxiety was one of the main concern post-COVID. Many of the people lost their businesses, many of the people lost their jobs, and there was a shift in the people mindset. They were not more inclined towards such conventional business or job availables. Now they wanted some sort of relief that even in case we do not want to, we are not ready to go for offline options, so we still have the option to do our jobs from the home. Like nowadays, you must be considering or you must be observing many people mindset that they are looking for job which are completely providing work from home options. Now there is less inclination towards work from office job. So again, it is a great in what we can say shift in the people mindset after COVID. Building better financial habits. Understanding behavioral finance can help individuals make smarter financial decisions. By recognizing our emotional triggers and biases, we can reduce impulsive actions and create better money habits. Tips for better decision making. Stick to long-term investment plans. Use SIPs and robo-advisor to automate decisions. Improve financial literacy. Be mindful of emotional reaction to market movements. Guys, we need to control ourselves emotionally. Being emotional is good, because without emotions, we are not human. So being emotional is always good, but emotional vulnerability is not good. We should not be emotionally vulnerable. Guys, do you agree with me? Being emotional is good, but emotionally weak, emotionally weakened, emotionally vulnerable is not good. That anything happened to us, we take decision in panic. This is not always good or never good. We should have that emotional temperament that even if anything comes to us suddenly, all of a sudden, there is any panic situation, still we can control our emotion and still we can take the wise decision. So emotional stability is really important for everyone. FinTech evolution. Industries which are providing financial solutions. What is FinTech and why it matters? FinTech short for financial technology, refers to the use of innovative technologies to improve and automate financial services. It bridges the gap between finance and digital innovation. FinTech has transformed the way we bank, invest, borrow, and insure, making financial services more accessible, faster, and personalized. Its rapid rise has made it a cornerstone of modern finance, especially post-COVID. Guys, we all use different UPI platform, online platform, such as Paytm, PayPal, Bharat Pay, and many other platforms are available for doing online transactions. So they are basically FinTech. They are providing financial services in such a way that they are providing a platform to perform the financial transaction. And now we people have become so much habitual or so much used to of doing our transaction on these portal or these application with the help of these application that we have gone far away from the conventional environment. Nowadays, many times it happens to me, I go to a market. If I have two options, I am buying something, I have two options. One is to give the hard cash and other is to use any online platform, any online payment gateway to perform the online transaction, to pay the money via online mode. I am more convenient via online mode. I am more handy on my smartphone that I'll be just bringing my smartphone, open that application and pay the money. And just putting out some money, some hard cash from my pocket, it becomes more inconvenient for me sometimes. I am more handy on my smartphone to pay the money. And I believe it is not with me only, it is with everyone. We have become so much used to of technology that we have come far away from that conventional environment where we used to do hard cash for each and every transaction that we perform. Timeline and milestones in FinTech development. Early 2000s में online banking and digital payment systems like PayPal. 2010 growth of mobile wallets like Paytm, PhonePe, UPI launch in India. 2017 blockchain, cryptocurrency and peer-to-peer lending. 2020's rise of neobanks, AI in finance, digital KYC. Nowadays, for example, if you want to open a bank account with any bank, so they perform the video KYC. You just need to open a link. There will be person sitting in front of the camera. Your camera will also be on. They will ask you a few questions. They will also ask you to show your documents such as PAN card, Aadhaar card. They will perform your KYC and your bank account will be opened. It is that easy nowadays. Instant loan approvals are also done in the same way. FinTech sectors like lending and credit. These are the sectors where FinTechs are involved, like lending and credit, insurance, selling insurance policies, wealth management, Grow, Zerodha, payments and UPI, Google Pay, Bharat Pay, etc. Advantages and concerns of FinTech. Advantages: instant access to banking and payments. We know they're very quick, they're very instant. Within a second, you perform online transactions. Financial inclusion in rural and remote areas also. Nowadays, in case you go to villages of India, they are also depending on this technology. They are also using Paytm. Like many times in last year when in G20 summit, many of the foreigners came, European came, and they were buying some stuff from the food vendor or other vendors like vegetable vendors, fruit vendors, just sitting on the road in India. And they were very surprised. Then they can pay them with the help of this technology, Paytm, UPI or Google Pay, such apps. So it is that, what we can say, it has that reach that it can also reach to last corner of your country. Convenient platform for small businesses loans. In case there are financial institutions who are interested in providing lending to small scale industry who need little amount of loan, so they can create an app which will asking for review documents and accordingly the loan amount will be disbursed. Personalized tool for budgeting and investing. Again, every person needs to plan their finances. What is the amount you have in your pocket and how much the expenses, and accordingly you can plan your finances. Even there could be any organization, there could be any business environment, or can be individual. Everyone needs to plan their finances, and for that there are many personalized tools available in the market which can help you in budgeting and investing. Concerns. What are the concerns for FinTech? Cybersecurity threats and digital fraud. Definitely, under the umbrella of FinTech, many fraudulent activities are being carried out. Some people can pose you as FinTech. They are running any FinTech, but actually they are fraudsters. They will trap you in any malicious transaction and rob your money. So you need to be very much careful when you are entering into such transaction, or when you are relying on any online platform. You really need to be very much meticulous. You need to think twice when you are entering into transaction on any platform. Even it has happened to me in past that many people, like, there are many websites available in the market on the web for hotel booking and for some other purposes, and they give you such an attractive option that you get into trap, that you will find the services at a very cheap rate, that you might be getting very fascinated that how can I get such services at a very cheap rate. And in such attraction, you might be thinking of buying those services or product. After that, you might be not be receiving that services or product, and there will not be anyone available on that web to encounter your queries or answer your queries. There won't be any customer care number, nothing, no email ID, because just you got attracted or fascinated by such services that they are providing such a services at a cheap rate. You just in a quick, you just got entered into such transaction and made the decision. Misuse of personal data and privacy risks, already discussed. It is one of the concern on any online platform, not with FinTech only. Regulatory lag in fast changing financial tech. Yeah, government needs to be very much stringent on FinTechs. They need to take quick decision, very dynamic decisions, because FinTech is such kind of industry. It is very dynamic. Every day there are new developments, new changes, and accordingly government also needs to be very robust when making laws and making policies with respect to these business organizations. We can say now, when the thief is smarter enough, police also needs to be more smart. The future of FinTech is constantly evolving and is expected to dominate the future of finance. The next decade will see deeper integration of finance into daily life, making it seamless, predictive, and embedded. Emerging trends to watch: embedded finance, paying for insurance or loan with apps. What I can say, it is happening that we can buy insurance or just repay our loans with the help of application only. For example, you take any loan from a bank, so you can just pay your EMIs or reimbursement, or what we can say, make the repayment with the application only. You do not need to visit any offline center for that. AI powered finance, personal finance assistance, and voice controlled banking. Like, for example, there are applications available for your banks which are providing you personal solutions, and also you can just ask your questions or queries just by speaking from your mouth. Also, there are voice recognition softwares embedded in those applications or websites, which can actually recognize your voice, whether the person accessing the application or website is the real person, authenticated person or not. Blockchain expansion, smart contracts, and secure digital IDs. Open banking, seamless data sharing across financial institutions with user consent. Sustainable finance and ESG investing. ESG means environmental, social, governance investing. Guys, sustainable. We have been hearing this term since our school time. You must have heard of term sustainable development. That do such a development which should not be harmful for the future generation, and also taking care of the usage of future generation. So also the finance should also be sustainable. Let us read. Sustainable finance refers to the financial methods that support long-term economic growth while also considering environmental protection, social justice, and ethical governance. It refers to financial methods that we should develop such financial methods which will ensure the long-term economic growth, not short-term, but long-term economic growth, while also considering the environmental protection, social justice, and ethical governance. Any area of the society should not be unjustified. We need to do justice with every person of the society. We need not to create such technology which can keep or prevent any area, any region or any part of the society away from this technology. We need to follow very holistic or integrated approach that whatsoever systems we are creating, it should be accessible to every person of the society, and also it should be created in such a way that your technology or the setups that you are creating, it should not become outdated or obsolete in coming future. And also you need to follow the practices which are ethical. There should not be something unethical. ESG stands for environmental, social, and governance. Three key factors that investors use to assess the non-financial performance of a business. This concept is gaining momentum as more investors seek to create wealthy responsibly and reduce risk by supporting companies that prioritize sustainability. Nowadays, investors are considering those investing options which are providing future security, future certainty. Nowadays, if you guys have idea what kind of schemes, what kind of pension plans that banks are bringing, they are providing you such kind of pension plans or investing plans that in case you are alive, you will be getting this amount of return on your investment, and after the maturity of investment plan you will be getting this lump sum amount, and in case you lost your life in between of the investment tenure, you will be getting this insurance amount, this insurance cover. So even the financial institutions who are providing financial services nowadays are focusing on providing those investment plans to their customers or their users which are providing long-term benefit, not only short-term benefits. And accordingly, investors are taking their decision of prioritizing their investment plan. ESG in action, real company examples. Environmental, real companies taking green action. Infosys, it achieved carbon neutrality across all global operations using 60% plus renewable energy. They are depending on renewable energy plans and accordingly using 60% of the renewable energy in their operations. Tata Power leads India in solar and wind power with eco-friendly infrastructure. ITC Limited practices also ferro-solid waste to fill and promote sustainable agriculture. So these are the companies which are taking environmental friendly decision, green actions. Then social companies which are doing social welfare. Hindustan Unilever run health, hygiene and rural awareness campaign across India. Wipro, strong commitment to diversify, hiring and inclusive workplace culture. Like hiring people from different areas, from different backgrounds, ignoring any racism, ignoring any gender racism or any caste racism. Mahindra and Mahindra focuses on rural education, women empowerment and skilling programs. Then governance, ethical and transparent practices. HDFC, known for strong corporate ethics, independent board and customer protection. In all of the private sector banks, the practices followed by HDFC are number one in India. They follow very much ethical practices. They are very loyal to their customer. TCS, transparent reporting and high compliance trends. Larsen and Toubro implements anti-corruption policies and robust audit framework. There is some misprinting. Companies with strong ESG practices are just doing good. They are doing well. Investors now view responsibility as a pillar of long-term performance. Guys, it takes really a long time to have such image in the market. When we talk about these organizations being Infosys, Tata Power, Wipro, ITC, TCS, HDFC, Larsen, Toubro, Hindustan, these companies are doing good for the society for years and years, for decades and decades. And it is a result of that now they are recognized as some of the good companies in market. Now they are getting rewarded for that consumer have a blind faith on such companies. It is not earned overnight, but it is a result of years and years. Why sustainable finance is the future? Why ESG is trending now? Climate change urgency. millennial and Gen Z investor demanding transparency, the new investors, the new customer base, which is more intellectual, more aware. So accordingly, they seek more transparency, more accountability from the vendor side. You cannot just befool them easily. SEBI and other regulators pushing for ESG reporting. There are many regulatory authorities, one of them Security and Exchange Board of India. Such kind of regulators are also pushing the companies for ESG reporting. You also need to be environmentally, socially, and need to follow the good governance practices. Fresh angle. What's changing the investor mindset? What is that which is actually changing the investor mindset? What was the old view? Invest where you get the most return. Invest where you get the most return. New view. Invest where the future is safe and responsible. Guys, do you know one thing? In the last 4 to 5 years, many fraudsters came into the market to trap you in malicious transaction and rob your money. Guys, very important thing I am discussing. In the last 4 to 5 years, many fraudulent people came into the market and used the platform like Instagram, Telegram, WhatsApp. They message you on Telegram, they message you on WhatsApp, they message you on Instagram. They share some of the investment plans with you that you put this amount of investment and accordingly we will give you 50% return, 100% return, 200% return. And in the initial transaction, they actually try to give you the same return. You give them 1,000, they will give you 5,000 to trap you in that transaction. And accordingly, when you will bid for the higher amount, they will keep your money and run away. You will see what has happened to me. So actually, you got trapped into that transaction because of your old view. Invest where you get the most return. But now that view has been changed. New view is invest where the future is safe and responsible. Now people are more inclined toward those investment options which are safe, which ensures you about the future, safe future, and also which takes the accountability, which are responsible, which are authenticated. Bonus insight: companies with strong ESG scores often bounce back faster after market downturns. Whenever there is a dip in the market, but the company which has been able to win the trust of the investor in the market in long run, they have a good history. They're able to bounce back very fast. Market dips affect them, but for a very short time. They see the market correction very soon. Beyond profits, how ESG builds legacy. Very important thing. ESG investing is not just about ethical branding. It is a strategy for long-term survival. Businesses that pollute, exploit, or hide data are no longer just criticized, they are dropped by investors. In contrast, ESG-driven companies create value and trust. Guys, nowadays, people are very smart. They are educated. They are financially educated. They have got the financial literacy. They know how to take the decision. So in case there are people who want to trap them, who will try to misuse their data or the money, they can have some short-term gain. But very soon, they will be discarded by the society. If someone will do the business with the short-term mindset that they just want to take some money from the consumer and go away, so they will actually go away. They will not be able to sustain in the market for long run, because consumers are also very smart nowadays. Or it is very, very difficult to trap them even in the initial transaction, even for the first transaction. So in case you follow the wrong practices, you will be discarded by the society very soon. So it's better to follow the long-term practices, ensure about the long-term future, and also you will be rewarded by the society for the same. ESG-linked mutual funds and SIPs now available in India. Greenwashing is being exposed. Transparency is must. FinTech app offer ESG rating for retail investor. ESG ratings are now also available for investor so that you can see what is the ESG rating of that particular company. AI tools are being used to evaluate ESG risk in portfolio. Nowadays, when you open any application related to FinTech or any SIP application and any banking application which can help you for SIP or other investing decision, they show you different parameters, just like a risk barometer. They show you risk barometer. In case you invest into this plan, this is the risk: higher risk, moderate risk, low risk. Accordingly, they will show you multiple rating: environmental friendly rating, social justice rating, and other governance practices rating. Accordingly, you can make your decision whether to invest particular fund or not. Personal finance, one of the most important. It is related to each and every individual, whether it is me and you. Personal finance refers to managing your own money, including how you earn, save, spend, invest, and protect it. Guys, we all earn money. And when we earn money, second question is what to save, how much to save, and where to spend. And guys, there is difference between saving and investing. Smart people invest, they don't save. Smart people invest, they don't save. Again, I will say, in the older generation, people were inclined towards saving. They were very pessimistic toward taking even a little risk. But nowadays, there is change in mindset, shift in mindset. People are ready to take some sort of risk as per their risk appetite. Guys, if I ask you, is it bad to take risk? Guys, my question from you, is it bad to take risk? Guys, all of you.
So that depends to person from person. Like
Definitely.
how much a person is able to tolerate risk. But in general terms, if someone really wants return, then risk has to be taken. So
risk has to be taken.
yeah.
So as he said, risk is a very subjective thing. Everyone has a different risk appetite. For example, if I am a fund manager, someone comes to me that I have 10 lakh rupees, I want to invest. Then I will try to obtain some more understanding about that person. Are you a salaried person? Or you are a government employee? You are working into government sector, you are working into private sector, or you are a businessman? How much financially strong you are? What are other financing arrangements you have? What is your total net worth? How much you own? What are your future plans? Multiple questions I will ask from that person. There will be two-way approach. Two-way approach means one is I'll be directly asking from that person a question: what is your risk appetite? How much risk you can bear? And other is, with some other questions, I'll also be able to understand how much risk he can actually bear, because he might not be financially educated. In a hurry or in a attraction of earning more money, he might be fascinated with more return. So he can say that yes, I'm ready to bear the risk. But I also need to be skepticism. I also need to follow the professional skepticism from my side, that okay, he is saying he's ready to take the risk, but I also need to be responsible. I also need to understand, analyze his financial position, whether he will actually be able to bear that risk. What is his net worth? What are the other financial option available to him? Accordingly, I will reach to the conclusion whether he is able to bear such level of risk. There could be 3 levels of risk: lower risk, moderate risk, high risk. I can directly ask a question, or I will also do my self exercise to assess the level of risk he can take. And I will also need to do a cost benefit analysis to him. Like, for example, if you want to do a risk-free investment, you can just invest your money in FDs, fixed deposit. You will get 7 to 8% return, 6 to 8% return on an average, and you will be free from any risk. It is completely a risk-free investment. But in case he says, I want to earn more return, then I can say you can go to mutual funds. I can create a mutual fund portfolio for you, where I can just give you some approximate, not guarantees, not at all guarantees, but give you just a rough approximate that it is subject to market risk, but you can be able to earn 12 to 15% return. I'm not guaranteeing you, but you might be able to earn a 12 to 15% return But again, the risk will be higher. In FDs, there was no risk, but there is some percentage of risk. In mutual fund also, obviously, I'll be diversifying your portfolio. I'll not be investing complete money in the stock market. Some of your money will be invested in debt instrument where you will be earning fixed amount of interest, but still some risk is there because some amount of money will be invested directly into the stock market. So I need to inform him that I am taking some risk on your behalf. So your principal is also subject to some risk. But he says, no, I'm not okay with 12 to 15% return. I want more return. Then I said, okay, then I'll be increasing your equity portion. I will be increasing 80% money into the stock market, rest 20% into debt. But again, make sure your risk will be very higher. Your money is subject to market risk. It can even happen that it will wipe out your principal. So I need to take very informed decision for my user who is coming to me, using my services, asking investment advices from me. Key component of personal finance, income management, knowing your income sources, salary, freelancing, rental, etc. Planning based on regular and passive income. Nowadays, people are more inclined toward passive income too. They have sources of active income, but also they are creating such ways where we can earn passive income. So those factors also need to be considered when you are taking apne financial decisions you are taking. Saving emergency and funds. Whenever you are making your financial plans, you are doing investment, you also need to keep some money set aside for your emergency and rainy days. Setting aside funds for unexpected situation. Any mishappening can happen to any person. You need to have good planning for that. Expert recommend 3 to 6 months of expenses as backup. Expert recommend you need to have a backup of 3 to 6 months of expenses as separate fund. You should have that fund always with you, other than your financial plans that you're going to make, other than your investment plans that you are going to make. Budgeting, allocating money to needs, wants, and savings. Allocating money to 3 areas: your needs, your wants, and your savings. 50-30-20 rule: 50% needs, 30% wants, 20% savings. 50% you will be spending on your needs, without which you cannot survive. They are your dire needs. 30% wants, that you can live without them, but these are your wants that you want to get fulfilled. You can allocate 30% funds to them, 20% saving. You need to save your 20% money, income. Debt management, prioritizing repayment of high interest loans, avoiding unnecessary EMIs and credit card debt. Guys, credit cards are available to you for your benefit, no doubt about it. But as a general financial advice, it is always advised to avoid the usage of credit cards and taking high burden loan. And in case there are some existing loans on your name, it is always advised to repay them soon. For example, there are some people who are under a big amount of debt, but still they are investing, what we can say, not investing, they're spending their money on wants and luxurious stuff. And at the same time, they are under a huge debt. So it is not always good. In case you are under a good amount of debt, you first need to discharge that debt and then think about other things. Always prioritize your debt. Investing for the future. Why you should invest? Beat inflation over time. The thing that you are able to buy for 10 rupees today, you won't be able to buy the same thing for 10 rupees in future. Time value of money. You must be aware about that concept. 10 rupees will not be carrying the same value after 1 year. It does not mean literally the 10 rupees will not be having 10 rupees, but actually you won't be able to buy the thing from 10 rupees which you are able to buy today. Growth wealth passively. You need to invest your wealth in such a way that it is growing passively, whether you're directly involved in that or not. Someone is on unmute, please mute yourself. Achieve long-term goals like education, marriage, or retirement. Anyone there? Malathi, Malati, your voice is not clear. Your voice is breaking. Popular investment options in India. SIPs in mutual fund. It is always encouraged that you should go for SIP, systematic investment plan, where you have two options. One is every month or other is lump sum, but always invest in SIPs. It is always advisable. They are also subject to market risk. They are always subject to market risk, but it is what we can say more legitimate option for those people who are not having that much of financial education. Always invest in SIPs. Go do little amount of investment every month if you can. Public Provident Fund, again a safe investment, risk-free investment, FDs, fixed deposit, stocks and ETFs. At the bottom, there is an advice: start early, invest regularly, and let compounding do the magic. It is a very common saying in the financial sector. Start early, invest regularly, and let compounding do the magic. The magic which compounding can do for you, nothing can do. When you invest 100 rupees, it becomes 110 rupees. If you are getting rate of return of 10%, it will become 110 in the next year. And in the next year, 100 rupees will not be investing only, 110 will be investing. So it is the magic of investing. Tools and tips for smart personal finance. Digital tools, mobile apps like Cred, ET Money, Grow, Moneyfy, spreadsheets or budgeting planners. Tips to stay on track. Track your monthly expenses. Set smart financial goals. Specific, measurable, achievable. Set such goals which are actually specific. You need to be aware about what are my goals. They should be measurables and also they should be achievables. Don't go for unrealistic goals. Review your budget every 3 months. Have your eye on your budgets. Where are you spending? Are you doing some baseless expenditures? Never spend more than you earn. It is very important. In case you are spending more than what you are earning in a month, you are just eating up your savings and it will have very negative impact in near future. Final advice: financial literacy is your strongest asset. You need to be financially educated. The more you learn, the more confident and in control you become with your money. So guys, these were the topics that we discussed today. Now, if you have any question, any query, you guys are welcome to ask. Otherwise, we are just done with the time. We have completed 1.5 hour of webinar. It was really a nice discussion with you. Anyone has any doubt, any query, you can ask. Okay, guys. So with this, we conclude this session. It was really a nice discussion with you. Thank you very much. Bye-bye. Best of luck.